Welcome to the channel Get Rich. Today the company we are going to look into belongs to the plastic pipe industry. They are one of the market leader in plastic pipe industry. So they have about 6 to 6.5% of market share in the PVC pipe industry. So we are going to look into which company it is and what are their revenue streams are, and what are their financial statements look like, and how are the valuations are now, and we are going to look into the price target for 1 year and 2 year. So let's get started. So before having a look into the company, if you are new to this channel, please subscribe this channel, and if you want to have a free newsletter from this channel, please subscribe to the free newsletter in the description below. So let's get started. So first, let's see the plastic pipe industry, what are their growth prospects are for the next 5 years. So if you look into the plastic pipe industry growth for the previous 5 to 6 years, they are growing at a CAGR of 11%. And if you look into the next 5 years from financial 2019 to 2024, so it is expected to grow at about 13% CAGR. So if you look into the growth in the PVC pipe sector between 2014 and 2025, there are already about 34,000 crores market, and it is expected to reach about 51,000 crore market in financial year 2025. And also if you look into the growth in the CPV sector, what is CPV is chlorinated PVC pipes. So they have the high growth compared to other pipe categories. So it is expected to grow. CPVC is expected to grow about 18%, UPVC 9.6%, HDPE 11.4%, and PPR 11.4%. So we will see what each of these pipes are in some time. And if you look into the revenue mix in the industry, so about irrigation takes about 33%, and then plumbing and sewer and underground pipes that belongs to about 66%, and others is 1%. And then if you look into the organized versus unorganized sector, so organized segment is keep increasing their market share. So in financial 10 it was just 45% organized, and the remaining are unorganized sector, and currently in financial 2021 they reached about 60% belongs to the organized market. So organized players keep increasing their market share. And if you look at some of the type of pipes in the industry, for example, unplasticized polyvinyl chloride UPVC, it is used for irrigation, cold water plumbing, drainage, and we have chlorinated polyvinyl chloride. So CPVC is derived from PVC, but then it has a higher margin when compared to other pipe systems. And if you look into the next one, which is high density polyurethane HDPE, it is used in underground drainage, structured wall, WSS solid wall, hot and cold water systems. And then you have other polypropylene random PPR, it's also used in hot and cold water systems, industrial applications. And also we have composite pipes, which can be used in gas pipeline, industrial applications, and so on. So the company we are going to look into today is Prince Pipes and Fittings Limited. So if you have a look at their the company snapshots are key metrics. So they incorporated in 1987. So they have 7 manufacturing locations, they have 8 warehouses, they have about 7,200 SKUs, and they have 1,500 plus channel partners, and they are like debt free. They have 1,600 employees, and they are currently trading at a market cap, not currently, in December 31st 2021 they were trading at around 1,740 crores. Even currently they are trading at around 7,500 crores, and their profit after tax in financial 2021 is about 222 crores. They have 2,59,000 metric ton per annum capacity. And if you look at their brands, so they have Prince and Trubor. Trubor they acquired recently. And if you look at their stance in their industry, they are amongst the top 5 processor in piping industry. They have more than 3 decades of operations. So these are some of the key metrics of this particular company. And if you look into the Prince Pipes and Fitting Limited, so they are one of the pure play in Indian piping sector. If you want to play piping sector, so it is one of the they are not the largest, so they are emerging. So they are top 5 player, but still they are not the biggest one. They have much bigger ones also there. So we'll also look into it in some time, who are their peers are, and what are their market cap and other key metrics looks like when compared with Prince Pipes. And if you look into their strategy in location, they are present in northwest, and currently they also expanded more in south. They are expanding a plant in Telangana, and they are they have two brands. As I said, they have technological tie-ups with foreign players including Lubrizol. So they have key products. So recently they introduced StoreFit, which is a water tank using plastic, and they also recently introduced, or they have products like CoreFit, which is double wall corrugated pipes. So Prince Pipes is now officially a Fortune India 500 company. And if you look into their some of their financial metrics, so if you look into their market cap, they are about 7,500 crores. Their stock PE is currently 29.2. They have return on capital ratio 28.8%, and they have return on assets 14.8%. They have debt to equity 0.14, negligible. That's good. And if you look into their debt, they have lesser debt compared to their size of the company. And if you look at the price to book value is 6.76, and the current ratio is 1.86. So the promoter holding is 62.9%. So if you look at their price chart, recently they IPO'd at around 178 rupees. Those who invested in IPO of this company has made pretty much for like a lot of gain in a very short amount of time. So it went up from 178 rupees to almost 900 rupees, and currently it's trading somewhere around 700 rupees. It recently it fell, but then not a lot, but it fell. So then if you look at the PE chart of this particular company, so it was initially cheap when it IPO'd it around 20 PE, and then it reduced to even 10 PE, and then it shot up to almost 42 PE, and currently it's trading around 29 PE. So 29 is the average PE. So currently they are trading at their average PE, though they don't have much of the historical data. They just have 2 years since listing, but then since once they listed, the average PE is 29. And if you look at their business segments, what are their key business segments? So mainly plumbing and sewage and irrigation. These are the main sectors. So the plumbing comes the biggest one, which is 63.5% financial 2017, which currently increased to 68.9% financial 2021. And they have agribusiness, which is decreased from 35.4% to almost 26.2%. They also have others. About 4.9% of their revenue is coming from other segment. And if you look at their different segment, they have a plumbing solution, they have sewage and underground drainage portfolio, they have irrigation solution, they have storage solution. They recently introduced a water tank StoreFit storage solution. So if you look at their plumbing solution, they have RainFit, GreenFit, EasyFit, and FlowGuard Plus. So FlowGuard Plus is a CPVC plumbing, so that has a higher margin when compared to other products, and they can sell for higher price. So after introducing this FlowGuard, their price gap between their competitors or higher peers and them is starting to reduce. And if you look at the EasyFit, that's a UPVC solution, and they have PPR solution, which is GreenFit, and they also have RainFit. And if you look at the sewage and underground system, they have UltraFit, SilentFit, FoamFit, CoreFit, and they also have irrigation solution, AquaFit, SafeFit. And if you look at their revenue increase over the 9 months from last year to this year, they increased their revenue 33%, and their sales volume reduced 3%. So their sales volume reduced 3%, but their revenue increased 33%. So in that case, their price increased quite a lot. Because sales volume reduced, so the price is the revenue increase 33% is mainly because of their price increase they made. So the PVC price currently are going pretty high. In the recent years it went up quite a lot, and they also increased their price quite a lot. That's why their margin also went up because of the inventory gain. So that's also something we need to look into when analyzing the financial statement. Their margins, what are their margins look like, is they sustainable, and so on. So, and then if you look at the EBITDA, which also increased 28%, and the profit after tax, which also increased 29%. And if you look at the volume growth year over year, so they are doing 7%, 9%, 14, 18%, and recent financial 2020 and 2021 they only did 3% and 4%. So their volume growth is decreasing, but their price gain or price increase is keeping up their revenues on a much higher growth rate. And if you look at their product range, so we already saw they have planning and industrial solution, underground drainage solutions, and then they have soil waste and rainwater solutions. They have cable ducting solution, storage solutions. So the recent product launches is CoreFit, and then StoreFit, CableFit. So they are also doing a lot of product launches, or they are introducing a lot of products into the market. And if you look into their distribution network, so their distributors increased from 635 from financial 2016 to almost 1500 in financial 2021. And if you look into their different manufacturing plants, they are locating in north, west, south and east. They are less in south, but they acquired Chennai plant and Tribor plant in south, and also they are setting up an integrated plant in Telangana. So it's about 50,000 metric ton. So in total they have 2,63,000 installed capacity now. They are putting 50,000 metric tons recently. So it's about 20% of their capacity they are expanding in the south, in the Telangana plant. And if you look at their different manufacturing locations, they have manufacturing location at different places. So they have Haridwar, Chennai, Jaipur. So Telangana, they are currently they are just expanding. So the expansion is going to be 50,000 ton. So that's going to increase their total installed capacity to just about 3 lakh tons per annum. So that's good, they are expanding. And if you look into their collaborations, they have technical collaboration, which is Tooling Holland, a global leader in plastic molds manufacturing in Netherlands. They have technical collaboration. They have product collaboration with Lubrizol. So the Lubrizol is the world's largest manufacturer and also the inventor of CPVC compound. It's in USA. And also they have a collaboration with, for example, Ultratech Building Solutions. So their strategy is to collaborate and create a win-win solution with this Ultratech Building Solutions. So Ultratech Building Solution platform, they have a vast dealership network of about 2,000 plus dealers. So the Prince Pipes will want to leverage this relationship of dealers registered on the platform. So they want to penetrate more into tier 2 and tier 3 cities. So this collaboration is going to help them to increase their revenues as well. And if you look at their ads branding, so they are doing a lot of ad branding. They are increased their advertisement spend pretty good in the recent times, and they are able to do a lot of branding, and then they are try to put them as a premium brand, or try to put at the higher prices apart to their market leaders in the other largest peers. If you look at the peer comparison, so let's have a look at the different companies who are their peers are. So if you look at the different peers, so the Supreme Industries Limited, they have Astral Limited, Finolex Limited and Prince Pipes and Fittings Limited. Let's compare these four companies. So the Supreme Industries Limited, they have a market cap of 28,000, Astral is 45,000, and then Finolex is 8,000, and then Prince Pipes and Fittings is 7,700. If you look at the sales number, Supreme Industries, they have 6,000 crores, Astral Limited 3,000 crores, Finolex 2,700, and Prince Pipes is also 2,000 crores. And if you look at the PAT margin, so Supreme Industries is 15.5%, Astral Limited 12.7%, Finolex 16.7%, and the Prince Pipes and Fittings is 10.7%. So this might be a little bit old data. It is increased now. So the Prince Pipes and Fittings Limited, they are increasing their margin. So the EBITDA margin, if you look at the EBITDA margin, Prince Pipes is 17.5%, and then if the Supreme Industries, they have 20%, Astral Limited 20%, Finolex 13%. So they are almost in EBITDA, they are almost catching up with their peers. So they are 17.5%, still they have 2.5% to catch up with the industry peers. And if you look at the PAT margin, they have quite a lot to catch up. So they have 10.7% in the industry. The Astral Limited is 12.7, Supreme Industries is 15.7, so they can do about 2-3-4% in PAT margin expansion as well. And if you look at the price to book value, it's 9.4 Supreme Industries, Astral Limited 24 price to book value, Finolex 2.6, and Prince Pipes and Fittings, it's 3.2. It's listed, but recently they increased to at least 6.5, I believe. According to the latest data. And if you look at the PE, so Supreme Industries is trading around 30 PE, Astral Limited 114 PE. If you look at the Finolex Industries, it's 18.6, and then Prince Pipes and Fittings Limited, they are currently in PE of 29. So debt to equity, they have almost no debt, or very less negligible debt. And if you look at the return on equity, Supreme Industries is 36%, Astral Limited 24%, Finolex 14.4%, Prince Pipes 21.3%. And if you look at their different products, Prince Pipes is active in all of the four segments: UPVC, CPVC, HDPE, and PPR. And if you look at the chart below, so that's the growth rate in different years. So in the recent years, the Prince Pipes are growing much faster than their other peers. For example, in financial 2019, they grew about 19.5%, and then financial 24.1% outperforming all of their peers. And in financial 2021, they did about 26.6%, outperforming all of their peers. They are almost catching up with Astral Limited, or they are just higher than the Astral Limited also. So they are doing a very good job. And the chart on the right, which is the profitability growth in the recent past 5 years. So Aster Limited is 32%, Supreme Industries 34%, Finolex 23.4%, and Princepipe 49.2%. So when we compare with the peers past 5 profitability, they are doing phenomenally well when compared with the peers. And if you look at the manufacturing plants, locations compared with the other peers, so Prince Pipes have Maharashtra, Tamil Nadu, Uttarakhand, Dadra and Nagar Haveli, and then they have Rajasthan and Telangana, and then Astral is Gujarat, Tamil Nadu, Rajasthan, Maharashtra, Uttarakhand. Apollo Pipes, they have Uttar Pradesh, Chhattisgarh, Gujarat and Karnataka. So they also have a pretty mixed distributed manufacturing locations to cover all of the locations. And if you look at the chart on the right side, which is the ad spend compared to the percentage of sales compared to different peers. So if you look at the Aster Limited, they are doing about currently 3.3% of their revenue they are spending for ads. And then if you look at the Supreme Industries, they are pretty less, so around 1%. And if you look at the Finolex, they are also 1%. Prince Pipes, they are doing 2%, 2.5%. Currently, they even reached 3.1%, so just about the same as Aster Limited. So they are increasing their ad revenue to get more branding, and then increase their brand awareness. And if you look at the freight cost or the supply chain cost for different companies, if you compare with them, so if you look at the percentage of the total sales, so Prince Pipes, they are doing about 1.2% of sales as freight cost or supply chain cost. And if you look at the Supreme Industries, they are doing 1.7%, Astral 2.1%. So they are doing quite good. They have a lesser cost when compared to their other companies. And then if you look at the financial statements, so the revenues, they are increasing their revenues pretty good. It increased to about 2000 crores. And if you look at the realization or rupees per kg, it was 114 rupees into financial 2016 and about 123 rupees in financial 2020, and financial 2020 it increased to 150 rupees. So there is a steep increase in the price. So price growth is mainly driving their revenues. As I said in the in the introduction, we saw it's volume growth is almost not much, so it should come from the price increase. And then if you look at their EBITDA margin, so they are increasing their EBITDA margin. So it increased from 12.9% in financial 2017 to almost 17.5% in financial 2021. So we saw their different industry level EBITDA margin, they are doing about 20%. So they still have 2.5% increase, depends on their that also depends on the PVC price where it goes. That's also one of the risk. So currently they have a higher raw material price, so PVC price are at a very high now, so they might remain at this level for some time and then it might fall after some time. But currently their prices, the PVC raw material price are very high. They are also passing on to their customers, so that's why their price realization rupees per kg is also increasing. And if you look at the PAT margin, it was 5.9% in financial 2017. In financial 2021 they are doing about 10.7%, but different peers, they are even doing about 15%, 13%, 14%. So still they can improve their margin if you want to. So that also depends on the demand, and also there are different competitors where the price PVC price are going. These are the components which should play. Depends on whether they want to focus on volume growth or the realization price growth. So they want to have a market share gain, or they want to have a price increase. So they want to have a balance between the both. So then if you want to look at their financial statement quarter over quarter, so in December 2018 they were doing about 360 crores. In December 2021 they are doing about 664 crores in the bottom line. Net profit 17 crores in December 2018. It's reached about 67 crore in December 2021. So they are increasing their net profit. That's good. And the operating margin is also about 17% in the recent quarter. And if you want to look at the year over year, so in March 2015 they were doing about 957 crores, and March 2021 they were doing about 2000 crores. In 2022 they were almost doing about 2500 crores. The net profit increased from 16 crores in 2015 to almost 222 crores in March 2021 to almost 258 crores in March 2022. And if you look at the margin, it's also increased from 9% to almost 17% in 2022. So it can even reach 20%, but that's depends on the market, the PVC price, and that it depends on everything. But their peers are even doing about 19-20%. Those they still have 2-3% if you want to improve their margin. So they are not at their peak profitability level. And then if you look at the sales growth, they are doing about 16% in the past 5 years. The profitability growth is 50% for the past 5 years. And the stock price, of course, it went up quite a lot. And if you look at the return on equity, they are doing about 23% return on equity. And if you look at their net debt and net worth, so their net debt, they are reducing their debt. So in financial 2017, they have about 1.3. Currently they don't have almost net debt is almost 0. And if you look at the return on equity and return on capital employed, they are increasing their return on equity and capital employed. It's 23.6% and 27.1% in financial 2021. And if you look at the balance sheet, so they are also increasing their balance sheet. So currently they are in March 2021, they were about 1600 crores. They have reserves of 933 crores and the borrowing is reduced to almost 88 crores. So that's good. They are strengthening their balance sheet, reducing their debt. And if you look at the cash flow statement, so their cash from operating activity is increasing. So that's good. In March 2021, they have about 307 crores from operating activity, but they are also investing and also they are paying back debt, I guess. And then if you look at the net cash flow, they don't have much free cash flow yet, but I think they are also investing in their Telangana plant, so they are guiding their capex. So yeah, I think they are in a growth mode still, so they'll take some time to reach a good free cash flow. And if you look at the PAT growth of the analyst expectation, so in for example in 2024 financial 2024, the PAT, the analysts are expecting about 360 to 370 crore, and the revenue they are expecting around 3,600 crores revenue for financial year 2024. And if you look at the shareholding pattern, the promoter holdings was steady, but then in December 2021 they slightly reduced their promoter holding. And if you look at the FIA, they are keep on increasing their shareholding, and the DIS they reduced, and then recently in December 2021 after the price fall they also started increasing their shareholding. So that's good. And if you look at the mutual fund shareholding, so for example net buying or selling, so in August they are buying, September they are buying, October they are buying, they are selling in November and December, and in January they are buying again. So that's good to see. And if you look at the different mutual fund holding who are holding this particular company, so it's Mirae Asset Tax Saver Fund, Mirae Asset Midcap, Mirae Asset Aditya Birla, Mirae Asset Mirae Asset they are holding in each and every fund, I think UTI, Aditya Birla, and then Invesco, HDFC, and then Tata, UTI. So if you look at what they are doing, they are either buying or selling. So if you look at the November, nobody is buying, or very few are buying, or most of them are a little bit of them are selling, or they are did nothing. In December, most of them did nothing, and one fund sold. And if you look at the January after the price drop, so you see a lot of funds increasing their shareholding. If you see Mirae Asset Tax Saver Fund, they increased 3.5%. Mirae Asset Midcap Fund, they increased 23%. And if you look at the Mirae Asset Emerging Blue Chip, they increased 76%. And if you look at the Mirae Asset Hybrid Growth, Mirae Asset, mainly Mirae Asset funds, they are buying this company like crazy, I believe. They are increasing their shareholding. But then if you look at the AIM percentage of the fund, it's about 1 to 2%, but still they have a high conviction in this company. So if you look at the valuation, so the revenue for 2021 is 2072 crores, in 2022 2500 crores, in 2023 I'm expecting it to do 3000 crores, in 2024 3600 crores, with the price with a growth of 19% for 2023 and 20% for 2024. And if you look at the net income, I'm expecting them to do about 310 crores for 2023 and 375 crores for 2024, with a growth of 20% and 21%. So if you look at the price target with the current valuation, they are trading at a P of 29. If you do price target with the current valuation, for 1 year it's 815 rupees, in 2 year 986 rupees, with the price cumulative growth of 20% for 1 year and 45% for 2 year. But then I believe they are going to do pretty good, though we have some risk, which I will explain in some time. I'm calculating with a P of 30. They are increasing their market share from 5% to 6 to 6.5% currently, and they are doing very good. They are introducing new products. They have I think they are doing pretty good. I think they are going to do pretty good growth of about 15 to 20% for the next 5 years. I believe at least 10 to 15%. If things not go well, at least they will do 10 to 15% growth in the next 5 years. So they can even do 20% for the next 5 years. So I think it's safe to estimate the P of 30. So if you take the P of 30, then the price target comes to 838 rupees for 1 year and 1014 rupees for 2 year, with a price cumulative growth of 23% for 1 year and 49% for 2 year. But then we have to also discuss the risk of this company, because the one thing is the PVC price increased in the recent times, so it went up pretty good. So also they increased their prices, so the PVC prices might remain high for some time, so then their raw material cost is going to stay high, so that's going to give some headwinds for them, because if prices are at if it keeps increasing, or at the state level, they have to increase their investments, and also their demand can, for example, slow down because of the price rise. But then it will come back, pent up demand, but then still that's also one of the concern, the price increase. And then the second one also, they have a litigation. The promoters and the directors of this company have one litigation still ongoing. So I think it's from the Montano developers. So they have a litigation with one of the company of this promoters, and the case is currently ongoing. But they said they have land value to cover, for example, if cases go against them. So I think that's a minor concern, but still we have to aware of the risk of this company. So these are the two key risks, I would say. But other than that, the company is pretty good. They are doing a pretty good growth, and they are increasing their branding, they're increasing their prices, they are introducing new products, they are increasing their margin. So that's, I see, it's good. The P values, I also feel it's not very undervalued right now, it's not overvalued, it's fairly valued. But the current P is 29. I'm estimating with the P of 30, so I think it's currently fairly valued. So if they can grow about 20% for the 15 to 20% for the next 5 years, they are going to do pretty good returns. If it remains at the same level, we can easily see compounded return of 15 to 20% for the next 5 years. So if you are holding this share, you can keep holding. If you're a new investor, even if you have a long term with, if you are okay with if you don't see, for example, other fair deals in the market, because market is pretty high. If you look at the IT stocks, some of them came down recently, but still it's they are quoting at a very high valuations. If you don't see any other place, this can be for example 15% compounded for the next 5 years. So it's a good buy, I would say. So that's my personal opinion. So it's not a financial advice, I'm not a financial advisor. You have to do your due diligence before investing in any stock. So that's all for today. If you like this video, like, share and comment. And if you are new to this channel, please subscribe this channel. And also, if you want to subscribe a free email newsletter of this channel, please subscribe in the link below. So thank you for watching and have a nice day. Bye bye.